Is M2 money supply driving us towards a stock market bubble? Here we discuss exactly that possibility and how it may all end. Of course, we're talking about M2, a broad measure of money supply, cash and savings and checking deposits, small time deposits, money market funds. It's the most commonly used measure of liquid currency within an economy. Here we can see M2, it's expressed in billions of dollars. In this case, we can see M2 currently stands at 21.3 trillion. This is the highest high we've seen since January of last year. M2 begins to rise 1 year before interest rate cuts. Now, how is that possible? Typically, we associate the movement in M2 with the changes in interest rates. But here we can see uh, interest rates, the Federal Reserve just started to cut in September of this year. However, M2 has been on the rise since January. Why did M2 begin to rise a year almost before interest rate cuts? Well, here we look to the U.S. Government Accountability Office. And they tell us the federal government has provided about $4.6 trillion to help the nation respond to and recover from the COVID-19 pandemic. You see, it's not just interest rates, it's also government spending. And in this case, $4.6 trillion was spent on the pandemic. And that led to a rise in M2. All that government spending found its way in the economy. We're going to talk about, by the way, other ways M2 can be affected. Here we can see M2 moving to the upside along with the S&P 500. This goes back to the beginning of pandemic in 2020 as interest rates were cut and all that government spending was initiated, all that capital or a lot of it found its way into the stock market. Now, what happens when M2 cools? Here we can see, this is 2021, M2 began to waver. After all of that spending and interest rate cuts, we saw inflation, the Federal Reserve pulled back. Well, so did the S&P 500. Both are correlated to the downside as well. Comparing both lines now on a year-over-year basis, and this is a very important, a very helpful way to look at M2, especially on a year-over-year basis, because it shows us the subtle changes in money supply. And we can see in this case, starting in 2021, both started to waver. Now, what else can affect M2? We spoke about interest rates. Well, there's government fiscal policy, like government spending and tax cuts. When the government spends money, a lot of that money finds its way into the economy. That helps M2. When government cuts taxes, less taxes for us to spend, therefore more money to shop with, and that finds its way into the economy. Bank lending practices. Banks are willing to lend more. That's good for M2. It increases the measure. We speak about this in the past, the mortgage spread. It shows us the amount of risk that the banks price into the mortgages. When the mortgage spread declines, that tends to increase M2. Consumer behavior. When consumers are optimistic, they spend. That money finds its way into the economy. Conversely, under a high interest rate environment, we save more. That subtracts from M2. Foreign investments help M2 when there's a strong US dollar. Flows come in from other currencies, from other economies. That's good for M2. And then there's economic events which include recessions and financial crisis. We tend to pull back. M2 declines. And then finally, the most obvious, monetary policy, interest rates, quantitative easing, as well as central bank reserve requirements. This can all affect M2. Now, why do we talk about all this? Where are we now? When will the stock market reach a pivot point? That's what we all want to know. So far, the stock market has been on a very strong tear for quite a while. We can see here as M2 increases, especially now since the early 2023, so does the stock markets. When is this all going to end? Well, to answer that question, we need to look for a couple different factors to play out. And the fact of the matter is now, at this point, we don't know. We need to see an end of M2, and normally, at least, it would sort of peter off and stop going up. And that we would want to see on a year-over-year basis, especially. We'd want to see M2 start to cool. So far, that's still moving to the upside. But we'd also want to see one of these other mitigating circumstances take place, such as a recession, a financial crisis, a significant change, let's say in fiscal policy or monetary policy of some other form. We would want to see some macroeconomic fundamental change that would correlate and coincide with a change in M2. No stock market can go up forever, but certainly if we're looking to pick a top in stocks, we'd like to see the possibility of one of those combinations taking place. We hope this has been helpful. We look forward to seeing you back soon.